Hello everyone, welcome to this week's weekly market view for Monday, the 2nd of October to Friday, the 6th of October 2023. My name is Vishal. Let's get started. All right, so let's start with the Nifty chart and let's start with the monthly chart. So since the past few days, we are seeing a significant corrective move from the time the market made an all-time high on the Nifty, and we can see how the month of September has closed bearish, yesterday being a national holiday. Today is going to be our first trading day of the month, and it's also going to be a very, very critical day because today being Tuesday, we are going to have the Nifty expiry. So we are expecting to see the markets to be a little volatile. If you look at the SGX market, the SGX Nifty or the GIFT Nifty right now is suggesting a gap down opening as we currently speak. SGX is trading at 19,574. So that's a pretty significant gap down if we do happen to get that gap down today based on the Friday's closing. All right, so let's quickly look at what some of the key levels look like, and at least on the higher time frame charts, where is it that we are likely to expect to see some kind of a support coming into the market here. Okay, so let's start with the daily chart first. We have looked at the monthly chart, we have looked at the weekly chart, so there is nothing significant here. But on the daily, let's look at some key levels. Okay, so in the past, we had seen that this 19,200, 300 odd level had taken a good support before the market rallied all the way. Now, looking at the price formation over here, today, if we do happen to get a gap down, this might continue to the downside. Okay, so now we are coming into an area which is not a level of demand, but it is a pivot. And just within this pivot, we have this gap level over here. So taking into consideration how the markets are moving, if the markets turn extremely bearish, it's more likely we will try to come to fill this pro gap which was created on the 1st of September, which was just close to around a month back. And within no time, the market is again coming to retest this level. So the moment the market comes into this area, we will have to see now whether the markets rotate from here or continue to move down. If the 19,219 level breaks on a closing basis, and if we have a candle close based on the daily chart on below 19,219, then we might continue to move downwards towards this area of demand. Okay, so right now we are hoping to see a bounce here. And if the bounce comes in from this area, the bounce is going to be a pretty strong bounce because the markets have significantly corrected. So there could be some kind of a short covering coming over here. Or in case if the market continues its trend to the downside, then we might see a bigger fall coming closer towards the 19,000 level, which is also a round number. On the supply front, we have this area of supply, which is now a little far away from current market price, but this is your fresh supply zone. And right now on Friday, we had a retest of this engulfing candle over here, which means that if the markets are going to respect this area, we might continue to move to the downside. Okay, so just keep a close watch on this 19,257, 214 area in this week to come, as this area might get tested and either the markets might tend to consolidate or might expect to give a bounce from this level. All right, let's look at the 125-minute chart, and if we can drill down slightly more closer to the 125-minute chart. So on the 125-minute chart, so where I had plotted the horizontal line, we have this area over here. So this is going to be the area of interest, right? So just watch out for this 1277, 19,222. And just above that, on the 75-minute chart, there is another key level of demand, which is this rally base rally. Okay. And this is also a very, very key area because this is right at the origin of the move. And it has never ever come here, right? So this level is a fresh level and it is also an authentic level, which means that 19,350 to 308 could be an area where we could see a potential bounce coming in from the market. If we go on to the supply zone front, we have this gap level over here. So this is also going to be a key area just in case if the market rotates and prints a new high. But looking at the price action here, more or less seems like it's going to be a trend continuation to the downside with key levels to look out for 19,350, 308 on the 75-minute chart. All right, let's move on to the next index, which is going to be the Bank Nifty. So let's load the Bank Nifty chart. Oops, I've chosen BSC by mistake. Okay. So we'll just wait for the charts to populate here. Okay, let's start off with the monthly chart. And if you look at the monthly chart, we've seen a pretty strong move or a strong correction or selling pressure coming on the monthly chart and no closer level of demand here. If you look at the weekly chart, we are in this weekly level of demand and we are coming there for the second time. So that is the reason why every time when the price comes to this weekly level of demand, we are seeing a bounce. Now, what is more interesting to see today is on the daily chart, we have created a drop, base, drop, and again a base, right? So if today, by any chance, we see a gap down, then probably there will be this new area of supply, which is going to be created here because of the gap down. And any retest into this 44,436, 45,000 odd level will lead to more selling pressure. Now, where can we see the market going towards? So if you closely keep your eyes on this gap level over here, we might see a strong corrective move coming into this area over here. Okay. And this is the area where we'll have to watch out for, where we might have to take a little bit of a pause on shorting this market and then focusing on long opportunities once the level comes here. So 42,783, 42,551. This is not an area of demand, but this is a gap level here. And generally, if you look at the prior data, in the past, whenever the market retests these gap levels, we tend to see a very, very strong bounce, right? Market has printed equal highs here. So it is very difficult now to comment and say that markets are going to resume and move to the upside. But there is a very likely possibility that if the markets continue its trend to the downside, then they might tend to consolidate in a slightly wider range. Okay, so these are the areas to watch out for on the Bank Nifty for the coming week with a slightly swing perspective. Now, if you go on to the 75-minute chart, just like the Nifty, below all these levels over here, we have this drop base rally of demand, and it has been tested once, more or less likely that it might get tested once again. And on the supply zone front, you have this drop base drop. So again, current market price is a little further away from our levels, but if the market does come to retest these levels, then we might expect to see some bounce coming into the market. Or if the market retraces up towards 45,283, we might see a continued downtrend on the Bank Nifty. All right, let's move on to the next index, which is the FinNifty or the Nifty Financial Services. So let's see what the Nifty Financial Services are doing. And let's start with the higher time frame chart on the FinNifty. All right, so I'm just going to remove all the markings here. I'm going to start making some fresh markings now. So if you look at the Nifty Financial Services chart, very similar structure to the Bank Nifty. Again, holding on to this weekly level of demand. So we might come to retest and make a little bit of a deeper retest. And if you look at the daily chart of Nifty Financial Services, again, very, very similar formation. So we are in this area where markets have, consolidated over here and potentially, if we do happen to get a gap down today, then we might see a new level of supply being created over here around 19,724. Okay. Now, very similar to the Bank Nifty, we have a area or a gap area on the Fin Nifty as well, which is this area. So if market continues and moves to the downside, then we might see this gap getting filled over here. So 19,290 to 19,215 will be an area to watch out for, where markets might take a little bit of a breather before either reversing to the upside or then moving down in a very, very strong manner. Okay, so just keep a close watch on this. This is one area to watch out for. And then I think there was one more area. Just let me check. Yeah, and this area. This is a level of demand. So we can keep a close watch on this one. 19,1032 to 19,000 odd levels. But first, we'll have to surpass this area, and then we'll have to wait and watch to see how the market reacts to this level of gap. All right, let's move on to the next market here. We're going to have a look at the USD INR. So let's go to the currency tab here. Let's load USD INR. And we tend to get some massive clues from the currency markets, especially when the markets are moving strongly to the upside. Now, in a couple of minutes, the currency markets are going to open, and based on where and how they open, it's going to dictate the terms for the market opening today. Okay, so if you look at the so this is the current candle, right? And this is the closing candle of September. And we can clearly see that markets did make a strong move on the USD INR, but somehow the moment the markets come closer to this 83.29 level, which is a resistance level, the markets are seeing a little bit of a resistance coming here, and there is some sell-off coming here every time the market touches this level, right? So if you see now also, the markets have created a little bit of a bearish formation over here. Demand is very, very far away from current market price. We do have this this gap level of demand here, and the reason why I'm going to be marking this level as a rally-based rally, because the market has printed a new high, right? So if the market wouldn't have printed a new high, I wouldn't have marked this level. And the next level of demand is this gap level, right? So you have this gap level, and then just below that, you have another gap. So a lot of gaps in the USD INR chart. Now, how do we go about reading this? So in case if the USD INR gaps down today, there is a possibility that although the Nifty might gap down in the morning, it might start moving to the upside, and it might move up quite strongly if that happens. But if the USD INR starts to move up and rally to the upside, then there is a very, very high possibility that we might see a potential corrective move into the Nifty, Bank Nifty, and the Fin Nifty indexes. Okay, so this is how I'm going to read the chart data for this week. Okay, this week we are going to be looking at the FMCG sector. So let's look at the sector chart first, and then we'll go with the specific stock that I'm going to be analyzing for you guys. Let's wait for the chart to load. Okay, so if we look at the FMCG sector, after printing highs, we are seeing a little bit of a pause here. Now, this pause is also because of the fact that we have come into this level of demand here, and the market is just consolidating, or prices are just accumulating over here. And then on the daily chart, you have another level of demand, which is somewhere over here, right? So this is your daily level of demand. So we are more or less closely within the higher time frame level of demand. And now if you look at some stock specific ideas here, if you go to Marico, and of course you can look at other stocks also, but this one is a little interesting for the fact that it's trending up strongly and nicely. And Okay. So if you look at Marico and look at Marico very, very closely on the daily chart, we see all this accumulation over here, and then markets have printed, a strong high. But if you look to the left, the markets have not been able to travel above this high. So this is the only cause of concern for this stock, and that's the reason why it's a little bit difficult for anybody to pull the trigger very, very close to these prices. And in case if there is, let's say, a big correction or a corrective move coming in, then Marico might start moving to the downside. Okay, now if Marico does move to the downside, we have this area over here which I would just like to plot, and I'm going to first plot it on the daily chart 518 to 513, which is just before this gap. And if you go to a smaller time frame, let's say a 75 minutes, let us see if we can find something there. Yeah. So you see the horizontal line that I had drawn just within that area. Let me just load the local data here. Okay, so this is the area to watch out for. Keep a close watch on this area. This is that origin of the move. So in case if Marico does come all the way towards 520 to 513, this is an area where we could see to expect, more or less we would expect to see a good bounce coming into this stock. Okay. Last but not the least, let's quickly have a look at the India VIX. And okay. So India VIX is currently trading at 11.45 percentage levels, which is quite low. But as you see during the day, the VIX is spiking up. And also, if you look at the daily chart, let's go on to the daily chart for a moment. This is the monthly chart. Yeah. So on the daily chart, we have this level of supply. And what is going to be key is that at any given point in time, let's say during the month of October, if we do see a spike coming into these areas where we would see some option premiums also getting inflated because of the high wicks, right? We might tend to start seeing those option premiums cooling down once the India VIX hits this area over here, which is 14.89 to 16.06. All right, so keep a close watch on these levels, which were discussed in today's session. I hope you enjoyed today's session. Thank you very much. And we appreciate all your comments that you do give us. If you're still not a subscriber to our channel, please hit the subscription button and become a part of the Sher Khan Education channel, where we post some very informative videos every week. And happy trading to you all for this week. Looking forward to see you next week. Bye-bye. Take care.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.